Welcome to Finance 3.0, your daily dive into the seismic shifts reshaping our global financial landscape. I'm Asya Semanova. Think about this for a moment. You can send a message, a photo, or even a video to anyone in the world in less than a second. It's effortless, instant, and nearly free. Yet if you try to send money across borders, you'll discover a system so clunky and outdated it feels like it belongs in a museum. Payments crawl through layers of middlemen, they take days, they rack up fees, and sometimes they don't arrive at all. In today's program, we'll expose how money actually moves across the globe, why the current system is broken, and why it's on the verge of being replaced. And I'll also share why this matters to me personally, because growing up, I saw firsthand how fragile and unfair this system can be. The reality of global money movement. Most people imagine that when they wire money overseas, it zips directly from their bank to the recipients. The truth is almost comical. Here's how it really works. 1. Correspondent banking chains. Your bank probably doesn't have a direct relationship with the recipient's bank abroad, so it passes your payment along a chain of correspondent banks. Each one checks the transaction, takes a fee, and passes it down the line. It's like a relay race where every runner demands a toll before handing off the baton. 2. SWIFT, the misunderstood backbone. Then there's SWIFT. People often think SWIFT is a giant international bank that moves money. It isn't. SWIFT is essentially a secure messaging system. Think of it as a glorified encrypted fax machine that banks use to tell each other what payments to make. The actual money? That moves later through separate clearing and settlement systems. 3. Central bank clearinghouses. Inside each country, payments flow through central bank systems like Fedwire in the US, Target2 in Europe, or BOJ-net in Japan. These systems often close overnight, on weekends, and during holidays. Yes, the world's money literally goes to sleep. This is why an instant wire transfer can still take 2 to 5 days to arrive. Visualize this. Your payment isn't flying directly from New York to Paris, it's bouncing from New York to London, to Frankfurt, to Brussels, and finally, to Paris. And every stop takes its cut. Why the system is broken. Now let's talk about the flaws. And trust me, there are plenty. First, speed or lack of it. In the 21st century, there's no excuse for global money transfers to take days. It's absurd that a tweet can reach millions instantly. Yet a payment to your friend overseas limps along like it's traveling by horse and buggy. Second, cost fees pile up at every stage. Correspondent banks, currency exchanges, compliance checks. A $1,000 transfer can easily lose $50 to $100 in costs. For migrants sending remittances home, that's devastating. Third, inefficiency. This system relies on decades-old infrastructure, time zone bottlenecks, and manual processes. Banks literally reconcile ledgers overnight, which is why your pending transaction is stuck in limbo. Fourth, exclusion. Around 1.4 billion adults remain unbanked. The cost of maintaining accounts, compliance burdens, and lack of access lock billions out of the global economy. The system is designed for big banks and wealthy nations, not for everyday people. Fifth, geopolitical control. The dominance of the US dollar means Washington effectively controls global payments. If a country falls out of favor, the US can cut it off from dollar clearing. Sanctions bite not because of military power, but because the payment system is centralized. That may serve US foreign policy, but it also creates enormous global resentment and drives rivals to seek alternatives. And here's where my own story connects. When the housing crisis hit in 2008, my immigrant family nearly lost everything. I was a teenager watching my parents work tirelessly, yet powerless against a financial system designed to punish vulnerability. That was my first taste of how fragile and unfair these institutions can be, and that experience colors how I see today's money system: slow, extractive, exclusionary. The case for replacement. So why does this system need to be replaced? Because the world has outgrown it. Global commerce runs on real time. Supply chains, e-commerce, and multinational businesses can't afford money that takes days to move. Technology exists to fix it. Blockchain networks, central bank digital currencies, and instant settlement rails already prove money can move instantly. The only thing missing is widespread adoption. Inclusion matters. A new system could drastically lower costs, making financial services accessible to billions currently excluded. Neutrality is crucial. A world increasingly divided by geopolitics cannot rely on a single country's control over payments. New systems promise to be less politicized, or at least spread control more widely. Think of it this way. The current system is like rotary phones in the age of smartphones. It still works, technically, but it's hopelessly out of step with reality. What's emerging to replace it? Let's look at what's already happening. 1. Central bank digital currencies, CBDCs. China is leading with its digital yuan pilot. Europe is exploring a digital euro. The US Federal Reserve is quietly testing wholesale settlement models. These programs aim to modernize money itself, bringing central bank cash into the digital age. 2. Private sector innovations. Ripple is working on blockchain-based cross-border settlement. Stablecoins like USDC and Tether already enable instant global transfers outside the banking system. Bitcoin's Lightning Network shows how micropayments can travel instantly and cheaply. 3. National payment rails. India's UPI, Unified Payments Interface, processes billions of instant transactions monthly, showing what's possible at scale. Brazil's PIX system is another example, allowing instant peer-to-peer payments across the country. These aren't just experiments, they're prototypes for the future of global money. The consequences of change, replacing the global payment system, won't just make things faster and cheaper, it will reshape geopolitics. Dollar dominance challenged. If CBDCs or alternative rails spread, the U.S. grip on global finance weakens. That shifts power balances. Banks disintermediated. If instant settlement becomes standard, do we still need chains of correspondent banks clipping fees? Probably not. New financial inclusion. Billions of people may finally be brought into the global economy. That's both empowering and disruptive. Privacy and surveillance concerns. Let's be honest. Digital money could also give governments unprecedented visibility into transactions. That's a debate society isn't ready for. The big picture. This isn't just about payments, it's about who controls the lifeblood of the global economy. For a century, the West, and especially the United States, has held the reins. The replacement system, whatever form it takes, could redistribute that power. And here's the paradox. The system is broken, but replacing it won't be painless. Legacy banks will resist, governments will cling to their advantages, and new systems will bring their own risks. But make no mistake, the change is coming. Closing. The global payment system isn't broken, it's obsolete. It belongs to a different era, and as commerce, technology, and geopolitics shift, the old order can't keep up. The question isn't whether the system will be replaced, it's who will control the replacement. Will it be governments with central bank digital currencies, corporations with their own rails, or decentralized networks that put power in the hands of the people? As someone who watched her family nearly lose everything during a financial crisis, I know this. Money is too important to leave in the hands of outdated systems. The world deserves better, and the clock is ticking. I'm Asya Semanova, and this is Finance 3.0.